details in just a moment. But to give you a snapshot of the topic, the fintech industry, as you know, has boomed over the past few years. And that means that many companies have gone from being small and focusing on their local markets to scaling very rapidly and now having an international customer base. So we are going to look at the challenges and opportunities in doing so with these four panelists that we have. So could you start off by just introducing yourselves to the audience rather than me doing it on your behalf, and explaining in a snapshot how your company has gone global recently?
Cool. Thank you very much. My name is Atwine, and my company is called Eversend. It's a neobank for the African market. So we started from day one building for multiple markets. We didn't do the thing where you build in one market and kind of go to the next market, because we have a very specific focus on cross-border business and cross-border money transfer. Yeah, so that's pretty much it. We've started in East Africa. We are live in Uganda, Kenya, just went live in Ghana last week. Yep.
Yeah, my name is Georg Ludviksson. I'm the CEO and co-founder of Meniga. Meniga is one of the global leaders in personal finance innovation. We are an innovation partner mainly to incumbent banks, so we work with big banks across the globe to help them create better customer experiences and new revenue streams. We work with many of the leading banks in Europe, and we're present now in most regions of the world, although we're primarily a European player. In a nutshell, kind of the most common thing we are doing with our bank customers now is to basically help them create user experiences that match and exceed what the neobanks are doing, and we've been behind many of the notable kind of launches in Europe and beyond in the last few years.
Yeah, hey, I'm Sebastian. I'm co-founder of Viacash.com. Basically, we rather had a typical German approach to internationalization. We first of all built a well-oiled machine in Germany for 6.5 years and then took the next step towards the new markets outside Germany, currently heavily expanding throughout Europe, are Europe's largest independent cash-in, cash-out infrastructure, the alternative to schemes like MasterCard or Visa that are servicing ATMs or branches. We mainly work with neobanks, but also traditional brick and mortar retail banks like N26 or Bank.
Hi, and I'm Joanne Dewar. I'm the CEO of Global Processing Services. We are an issuer processor, so we're providing the underlying technology connecting fintechs and digital banks to the scheme, to Visa and MasterCard. And we have primarily had a presence in Europe, and we've been extending globally. We had a launch in Asia Pac in November, so we have offices now in Singapore and Australia.
Fantastic, thank you. And so instead of throwing traditional questions around, I am going to ask you all a question, and then you are going to let me know if you think it's a myth or reality, and if so, why? So the first one is, choosing the right countries to expand in is make or break for your business. Who would like to answer that, myth or reality?
Yeah, I'll take that. It's absolutely a reality that choosing this. Yeah, absolutely. From our perspective, the opportunities for digital banks have all been about the regulators opening up to new banking licenses. The UK really led the way on that, which created the opportunities for the likes of Starling Bank, which is one of our clients. And we've been really following that opportunity as APRA in Australia have opened up their opportunities, and we're live with a couple of challenger banks, including Zinja. Hong Kong, we have WeLab. It's now Singapore and Malaysia that have got the digital bank license applications underway.
Anyone else?
Yeah, I can second that. I mean, following open banking, following your customer is one way to internationalize. I would maybe not go so far as say it's make or break. I mean, these are certainly high stakes decisions, but we prefer, when possible, to take smaller bets and follow customers and then expand from there. That's try to find a lower risk way, but these are very high stakes decisions. It takes a lot of time and investment to get credibility and presence in new markets.
Okay, so topic number 2, expanding in developing countries is cheaper, myth or reality?
I'll take that. Yeah. I'd say myth, mostly because what you find in developing economies is that infrastructure for whatever you want to build is non-existent, so it's really, really difficult. I usually give an example of building a neobank here in Europe. Could be as easy as signing up with one of the players who is licensed. You can piggyback on their license and then very quickly build on top of that and have something you can put in the market. In Africa, it's very, very different. For example, with our platform, we probably have maybe 50 partners that you have to integrate with, all these small people, mobile money. M-Pesa is only in Kenya, and then you have MTN mobile money in another country, and it's very, very difficult, actually, I believe. More difficult than developed markets, and definitely expensive from the point of view of the amount of effort you need to put in.
I think one of the things that we take for granted here in Europe is the SEPA agreement of passporting the regulation so that we can do the European expansion without the need to find new partners and new licensing arrangements country by country. So you've got 28 countries that you can go to with one agreement, whereas, regardless of the developed status of a nation in other continents, you just don't have that same passporting. And so being able to translate your offering and extend country by country is extremely expensive to do so.
Great. And what about this one? It's easy to recruit an international workforce that understands your core mission.
Yeah, perhaps I take this one. I think especially being based in Berlin, it's easy, yes, to attract international talent. I think it's extremely important to attract international talent because obviously local workforce is limited. Also, if you want to go international, you need local experience. I think that's one of the key topics. You need to make sure to have this on board. Yeah, that's why I would say it's easy and necessary.
Yeah, I can add to this. I think it's never really easy to get the best talent. There's fierce competition for talent everywhere. But having said that, I think it's pretty universal that people want to have purpose in what they're doing. So especially the best people that can choose from different jobs. So if you have meaning and purpose, then that's pretty universal. In our case, we have a higher purpose of helping people lead better financial lives. So understanding, managing their money, focusing on use cases that are fairly universal. So that has been, in our case, an advantage. And we've felt that purpose being kind of apply everywhere. So yes, more a reality than myth.
Okay, and this one is particularly interesting to me because I'm in marketing. Mastering an international marketing message is easy. Myth or reality?
Myth.
Yes.
And why?
Yeah.
Nothing is easy.
Yeah. What you find is that markets, even markets that look similar, are very different in terms of the way that the customers perceive products, in terms of culture, in very many ways. So building a generic product for multiple markets is a really, really bad idea. So you have to get into the market, hire people in the market who understand the market, and kind of customize your product to to the markets where you're going. A good example is when we built our onboarding at Eversend, it was very generic, like, hey, like the old internet forms of postcode and stuff. And then you reach, and many places in Africa do not have these postcodes. And then, for example, in Kenya, the national IDs do not expire, but you have an expiry date. So these small things, these nuances of the different markets that you have to understand and then build accordingly is very difficult. And the same goes for the marketing message. People think of things in different ways. Some customers may react, for example, to referrals. Some others may not react to referrals at all. And so that kind of strategy may not work in across the board. So definitely a myth.
I think the good news part of that is that actually in many cases 90 to 95% of the product is the same. So you've got the 5% tweak on the product itself, and that's where the big effort is. The marketing overlay is very much the overlay on the product as opposed to having to rebuild the product itself.
And perhaps just one addition, I think you also need to differentiate between B2C and B2B. I think it's way easier in the B2B segment to get one marketing message across than in the B2C segment.
Mm-hmm. And why is that?
Basically because consumer behavior is very different, but businesses usually have the same challenges, I would say. So for instance, if you take our customers, which are mainly banks, banks close branches in France, Germany, Spain, UK. I think it's everywhere the same. So the big picture market trends are the same for businesses, at least, especially in a more globalized world. However, consumer behavior might differ tremendously. I mean, just one example, even between Germany and Austria, if you think as a German, let's go to Austria, it's easy, it's more or less the same language, but you will pretty soon notice that the Austrians also have a pretty different culture. So I think that's very important to take care of the local culture and take this into account.
And the next one, tech and innovation enables scaling to be more sustainable and also enables fair trade. What would you say on that? Is it a myth or a reality?
I don't know where to start with that.
That's a massive one.
I would lean towards reality. I mean, tech and innovation is making it easier to work in a distributed manner, and just general progress and means that there is there are markets everywhere you can address, and that kind of contributes to fair trade. So I would...
Because, for example, there are companies like Moi Coffee, they're using blockchain to ensure that local farmers get paid and it's tracked in a very sort of fair way. And so it's sort of ensuring that tech and innovation allows you to grow and cover markets and ensuring that sustainability targets are met is basically what that means.
Yeah, I think that's generally true. Technology can cut out middlemen and kind of reduce the risk of corruption.
And I think particularly pertinent in the way that relates to payments is financial inclusion. Because what Fintech and innovation has enabled is creating products subscale that are specifically suited to certain segments of society. Because we talk about sort of people being excluded, but it's not a continuum. It's not like there's not one type of people that are included or excluded. The excluded tend to be lots of smaller communities that are non-served for lots of different ways. And Fintech enables products to be able to reach those communities for whatever reason.
And is that something that's at the forefront of your organizations?
So speaking about our product itself, it's also about cash, and cash in the end is also about financial inclusion, because everyone in this room probably loves Apple Pay and only uses their smartphone to do their everyday financials. But I think especially there are certain target groups in payments that are left behind. So yes, and of course you also need to think about, okay, how do I target specific consumer groups? And I think especially talking about payments is very target group specific. Yeah? So you can't say on average every European has a third of a credit card, because there are people who have one and there are people who haven't. Yeah? And I think it's really important also to tackle those consumers who are underserved. Yeah? And I think that's where fintechs can play a very good role, because for us it's easier to grab a niche than for big banks who always see the bigger picture.
Just a quick one to add on that. Definitely tech can help. So one of the things we are supposed to be doing, we are starting very soon, is a pilot project with refugee camps in various African countries to kind of bring them international remittances. And this is in cases where banks have failed or they're not willing to provide services to these people because they think they are not viable as customers, even like they have no economic activity. But the thinking behind what we're trying to do with the UNHCR is these people could be very productive economically if they had access to financial services, so access to international remittances, access to credit. And so it's super interesting. We'll see what comes out of this. Yeah, but we have a few pilots to do in Rwanda and Uganda with refugees.
Fantastic. And we've touched briefly on this, but partnering with other fintechs can help solve cross-border payment difficulties. Myth or reality?
Absolute reality. Partnership is the secret to success, I think, for across the fintech ecosystem. There are lots of different skills and requirements needed to bring a product to market. And it makes very little sense for a single organization to be able to provide that full set of capabilities. And so fintechs working in collaboration with each other to be able to bring the product to market is both efficient and enables in each of those areas to be able to stay current and ahead of the game.
Yeah, I fully agree to this. I think if you try to do everything on your own, you will be at some point in time stuck in the middle. And if you partner with people or fintechs who really are experts in a specific field, it also helps you to give a better consumer proposition. I think it's definitely key to partner and not to think, I can do everything on my own. And I think the trend is also clearly going there. I mean, look at all those challenger neobanks. They are becoming more a platform, actually, than traditionally one single product that gets offered by one bank.
Georg, do you agree?
Yeah, leveraging platforms is essential, and that's, part of a broad trend of modularization of banking and finance, so using those platforms. But then there are elements of partnerships that are hard, like sales partnerships, for example, rarely work. These are, but partnering in the sense that you kind of stay ahead of what's happening in the ecosystem and bring different ecosystems together and leverage those new platforms and APIs that are kind of being built at a very fast pace around you is essential to stay relevant.
And we all know the answer to this one, but it's just to trigger the topic. Tax and regulation is the same everywhere. Myth or reality? And who would like to start?
Well, it would be lovely if it was universal. It would make life a lot easier. But yeah, definitely a myth. And the regulatory requirements are incredibly different by country. Especially as you sort of get further afield, and that can have all sorts of implications, both in terms of being able to get a digital bank launched in many countries that just are completely closed to new entrants. From a processing standpoint, in certain countries there is a requirement for on-soil processing. So you actually have to have, a full stack kit in country in order to be able to process there. Now, a lot of these things actually are looking like they're evolving at pace as the world moves on, as we've sort of all moved towards the cloud environment, for example. Does on-soil processing make sense when the minute it hits the scheme themselves, Visa or MasterCard, it actually then bounces around the world 3 times before you get the message back. So, we're losing the traditional definitions, and I think it will open doors.
Perhaps one thing I want to add, clear myth, first of all. And you touched upon the point that it's easier, at least in Europe. I would kind of a bit disagree, because although we have a European single market, regulations, even in Europe, when passporting, are completely different. Take KYC as an example. Yeah? KYC standards in every market different. Yeah? I think on the political level, still a lot to do. I mean, we are pushing for it also on the European and political level. But I think harmonization of regulations, especially in Europe, should be one of the top things European governments should do. Yeah?
What a shame for the British with Brexit, with pulling away further. But yeah.
Yes.
Yeah, I totally agree. I mean, managing this well is critical. I mean, one of the early choices we made that helped us globalize, and maybe that comes from contrast with Sebastian, we started Meniga in one of the smallest countries in Europe, in Iceland, that was hard hit by the financial crisis. So if you have any ambitions, you have to think about how to globalize immediately. And that leads you to early choices like, I'm not going to build things that are super local, so we avoided pension or tax type of use cases. But managing your money or kind of helping you be a smarter consumer applies pretty. So that has served us well. But then it's also, to your point, that's just the functionality side. Then it's also like the tech side and data and privacy laws. And so now we go to markets that are, but it's critical that you have to deploy this on premise and data can't leave the bank or the country. In others, it's more open. So that means you have to be pretty flexible in your technical architecture, and that can lead to cost managing all that complexity. So finding the right balance and choosing where to play and where not in the context of this complicated world is that's the million-dollar question.
Yeah, it can be also kind of, at least for now, a USP of a company, especially if you solve these regulatory issues for B2B clients, because it's a big hassle.
Yeah. Okay, we've got a few minutes left, but I just wanted to check if someone has a question before I crack on with more myths and realities for any of our panelists. So any questions about going global as a fintech, going international? Yes?
I have a question in Africa, there is no regulation. How do you manage to expand in countries where the regulation is not in place?
Yeah, there is regulation. It's just bad. Yeah, so it depends on the market, and our play has been to work with existing entities in the markets where we operate, like what he was just talking about. So in some places, like in Uganda, we might have a partnership with a bank. In Kenya, we might have a partnership with a telecommunications company that has the kind of license that we want. So that's how we operate. But long term, we believe that we have to get our own licenses, because that can be a real competitive advantage down the road. So yeah, in some places, like in Uganda, the very first time I wrote a letter to the central bank, they said, hey, we do not have a law in place that allows you to operate. But they didn't say don't operate. So we just went back to our lawyers and says, hey, what do we do? And they say, just partner with an existing entity, and the licensed entity, the bank, is happy to work with us, because then they get deposits, because then they get to keep the money. But it's very different across different markets. For example, in Tanzania, for the same reason we were talking about, it became very difficult for us, and we went in and stopped. We just couldn't continue because of regulatory issues, especially. They are changing constantly. They're very, very, very strict, again, in terms of data. We have to build servers and what. This is not something we can do as a tiny new neobank. So we said this market is not going to work for us, and we ditched it. Yeah, so I think it's on a case-by-case basis, and we just play where it's easier for us, or where we understand the market really well.
Yes, okay. We can take both.
Could you guys share either sort of key takeaways from partnerships with banks, or sort of a tip on how to best structure POCs, pilots with banks?
I will echo what Olivier in the previous panel with Monitor said, that we try to approach it in a way where don't do free POCs unless you have a very good reason. That's a good filter of real intent. And we are in the business mostly of partnering with big banks. Our journey has been we start selling the software, but it's been more into trying to form a deeper and deeper partnership, so get more from each partnership. That in our case sometimes means investment, and kind of really invest in the long term in those partnerships, for kind of align the strategy clearly with the banks. That has served us well.
Perhaps also be careful and manage expectations. I think that's key for POCs. Define what they really want to achieve, because if they have expectation A and you B, in the end it's deemed for default. Yeah, and I think that's one of the very major topics. If you do a POC, manage the expectations. Ask them beforehand what would be a success for you, okay? And then define exactly the steps how you can reach those successes with the POC. Because if you, I don't know, POC with 100 customers, then they might say only 5 used it. Yeah, okay, that's right, but it really depends also on how you structure the POC itself. So be careful.
Yeah, I would add exactly be careful for slightly different reasons. I think, large banks can suck the life out of particularly smaller fintechs. Just getting a contract and due diligence over the line to be able to get a program up and running can take forever and suck ups, because if you don't even have your own internal legal counsel, just getting the proper legal advice to get a contract over the line. I mean, we've done one recently, and it's successful, but one of our sort of key strategies at the moment is to not go for too many whales at the same time. We need to keep the bread and butter coming in terms of, smaller organizations that are much easier to get the deal over the line and get the revenue stream coming in. The whales can seem really, really attractive, but, there can be a change that happens in the top, or a change in strategy, or you think you're talking to the right department, you've got this surefire bet, and actually there's 3 other digital initiatives happening within the same large institution. So, they're fantastically exciting if you do manage to win an opportunity, and good luck with it. But I would really say to try and make sure that you've got alternative revenue streams in parallel.
And there was another question here.
Yes, I had a question for Georg, for Meniga. So what would you say the key, one key point to grow on a global level and be a great success, and maybe each one of you can give us one key point?
Sorry, can you repeat? I missed the first part.
So what would be the key for a company like Meniga to go globally and build such a great success, especially that you deal with a lot of banks worldwide? Mm-hmm. So what would be the main key that you wouldn't go without?
Yeah, I think that,
like a tip.
Have an inspiring product is the one key thing, and keep that spark alive, and keep innovating.
perhaps also the key is the people. Yeah, I think the people behind it. You need to make sure to have the right people and the right mindset to go international, because what you can't cope with is if there are local fights, yeah, or people who want to defend their market or local topics. So I think the key is the people and the mindset behind it.
I've approached under an overarching strategy of what I've called scaling sensibly, which is all about picking very carefully and saying no to lots in order to go global. You don't need to say yes to every opportunity and sort of take over every country. Particularly when you've got a small leadership team, you've got a full technology roadmap. It's really important to be very picky. One of the key decisions that we made as an organization was that in our global expansion, we decided to head east first. We said we can't try and sort of address the opportunities in Asia-Pac and go for the Americas at the same time. We would just completely overextend ourselves as a leadership team, and that involved saying no to some pretty big things, including we're the processor behind Revolut, and we process all of the European countries, and we're now supporting them in Australia, New Zealand, Singapore, shortly Japan, and also Canada. But they wanted us to support them in the US as well, and I said we're just not ready to be able to sort of do that as well, and particularly for us extending into the US, I needed us as an organisation to be more mature from a legal perspective, because it's so challenging. The last thing I need is a class action lawsuit on something. So, saying no to some big stuff is really hard. But in terms of protecting yourself, not overextending, I think is really, really important.
Yeah, I'll just add, just to reiterate what the panel has said around, I think one of the things we found is we can't be everywhere, and because of that, you really, even the places that you go to, you really, really have to hire properly, hire somebody who has context in the market, in the local market, because that can make a real difference. It's like a no-brainer, but it's super, super important.
Do we have another question? No, all good, all covered. Great. I think that is all we had time for. That flew by. Well, thank you so much for all our panelists. Give them a big round of applause, please.